Hey everyone, and welcome to another episode of the Genesis Block podcast. Today we're going to have Chris James Murphy on our call, the founder of Klink Finance, as part of our guest interview series. And if you want a bit of a refresher on what Genesis Block is, we're a podcast that fundamentally and critically analyzes and breaks down crypto protocols and themes. We've done quite a few to date, from Frax, Ocean Protocol, TokiMac, all the way to themes like MEV, zero knowledge proofs, etc. So, we've really covered the breadth and depth of the space across all sectors and verticals, and also interview founders, operators, and investors in this space. And to that end, we've got Chris on today. So, Chris, great to meet you, and thanks for jumping on the pod with us.
Thank you very much. Really excited to speak today.
Perfect. So let's get started then. Chris, do you want to give a quick introduction to yourself, to Klink Finance, and your journey within the crypto space up to today?
Sure. I'll probably just kick off about Klink initially. We can jump into my history probably soon after or later in the conversation. But yeah, Klink is a gamified crypto platform. Basically, we want to bring more of a gamification approach to hodling. So the way in which we position ourselves in the market is actually mirrored over a very, very successful savings system in traditional banking known as prize-linked savings. And prize-linked savings, if you've not heard of it before, is where you basically win interest or yield week on week or day by day, as opposed to holding it on a fixed term interest basis. So we're a highly gamified mechanism in the way in which you can hold crypto assets. At the moment, we're based on stables, but moving into volatile tokens. So what we basically create is a prize-linked wallet, whereby you hold assets and win yield on top of your holdings in the wallet through our gamification in the platform.
Perfect. And with regards to the prize-linked savings, could you expand a little bit more on how exactly the mechanism of that works and how you guys are utilizing it within the context of Klink Finance?
Yeah, exactly. So first of all, I'll give you a quick history lesson. So prize-linked savings has been around since the 1600s. It's very prominent in the UK. So I'm Irish myself. I grew up with the scheme, but it has over 200 billion pounds in assets under management. Over 25 million people in the UK have a prize-linked savings account. It's very popular in India, Pakistan, Australia, Canada. There's multiple jurisdictions where it's popular in traditional banking. But I like to present it in three pretty simple steps. So the first piece that I touched upon, it's a savings account. You can deposit or withdraw whenever you wish. But the biggest difference is you win yield for interacting with the account as opposed to earning it on the compounding fixed interest rate. So how does it work? Basically, on an institutional level, what we do is we aggregate the liquidity together, and the institutional amount of interest that we can earn then basically creates a prize pool of tokens. We will then distribute this prize pool at random back to the community week on week, and we're actually moving to day on day. So our prize pools work daily by the end of June. So yeah, the trade-off to the user, it's still a pretty good place to earn a variable amount of interest. So you'll earn a variable APR, but you also have the opportunity to win on the upside of the total pool by chance. So our top prize at the moment is going to be $250,000 as we go into launch per token per day. So that will scale up. We plan to actually run it up to $1 million per day, which will cover through a mechanism known as prize indemnity insurance. So we would actually work through DeFi insurance so that if a user wins the top prize, it's paid out through a third party. So that's the way it operates. Functionally in the app, what you would see is when you sign up, looks pretty like a slick crypto wallet. As I'd mentioned, we're only hosting stables at the moment as we're in the kind of product market fit phase. So we accept USDC, DYOR, USDT. We'll be moving into volatile tokens by the end of this summer in 2023. But for every $25 worth of a token that you hold, you're basically given a ticket, and that ticket will operate in a no-loss sweepstakes lottery. So as I'd mentioned, the prizes can range all the way up to 250,000. But for matching one number per ticket per draw can be a couple of cents. It basically ranges of how much interest is being earned in the total pool. So the way in which we can actually distribute the rewards is completely fair. We're in the process of implementing Chainlink VRF, whereby our draw results will be completely on chain. It ensures fairness. And of course, if the prize payout for the top prize is won, it's covered through DeFi insurance. So we're basically the way in which we'd see ourselves is a bridge between the Web 2 and Web 3 world in terms of bringing this pricing savings scheme into the world of crypto through multiple different tokens.
Perfect. No, there's quite a lot of that. That's very interesting, and I'd like to unpack a little bit further. So in terms of the assets that users can use to save in, would it be crypto assets, so stable coins, or volatile assets, as you mentioned you were looking to bring on sometime this year, or how exactly can they do it using traditional methods?
Yeah, so we have on-ramp integrated. So you're able to purchase through third-party on-ramps. You're also able to send us crypto directly. But in oceans of your question, we accept all major crypto tokens and stables at this point. So USD coin by Circle, Tether, USDT, and DAI. So by the end of the summer, we're going to move into volatile tokens, basically to be able to create a mechanics or system where it gives live results. The tickets are fluctuating in price and volatility. It was just more of a technical build for us to roll out. So we're actually testing on our testnet, our private testnet, Ethereum at the moment. It's working. Once we're able to use one volatile token on the platform, we'll be able to roll it out across all major tokens. So the way in which we see our model is for stables, we earn through tokenized treasury bills. So we're actually working with on-chain tokenized treasuries. That's where we earn the yield that powers the prize pool. Moving into volatile tokens, we'll be using proof of stake staking. So whereby we'll actually create a community pool of staking infrastructure onto a common validator. That will compute basically the common prize pool, which we will then distribute to users through our game mechanics. So the next tokens that will roll out are most probably going to be proof of stake tokens on ERC20 tokens.
That's very interesting. And in terms of, you mentioned that when you're going to be depositing the stable coins and, you're going to be using tokenized treasuries as the sources of yield. From a regulatory perspective, the customers on Klink, how are they covered? Because obviously tokenized treasuries are clearly a security. So if you guys are taking their stable coins and essentially investing them in tokenized treasuries, from a regulatory perspective, how would Klink be treated firstly? And would that have any impact on customers who are depositing into Klink?
Sure. So we are a registered custodian. So we recently acquired a virtual asset service provider license in Europe that allows us to carry out multiple actions by the regulators. That includes custody. So we actually custody assets in Fireblocks technology. That's how we can create the common pools. We also take a number of processes around KYC. We have AML procedures. So we're certainly on the side of regulation. We're not completely DeFi. So the way in which we can access these treasury services is that it's through a B2B relationship. So ultimately, a lot of people at the moment can't access tokenized treasury bills. So because we're an institution, we act in a regulated manner. We cross our T's, dot our I's in terms of all of the frameworks that are expected of this landmine framework of global regulation that's coming into crypto, is that we do play by the rules. But because we can aggregate funds of users and then distribute it from a KYB process, is that we would actually work with the tokenized treasuries on a B2B basis. So that is very much a light touch of how we actually form the regulatory framework for us to be able to access and create yield for the communities.
Perfect. And with regards to the tokenized treasuries themselves, so you're saying it's a B2B platform. It's not something like an Ondo. Is it like an Ondo?
We are working with Ondo.
So yeah. Ondo is the one that you're working with. Okay. So just as an aside from an Ondo perspective, so regular retail traders cannot access Ondo treasuries. Is that correct? Institutions like yourselves who are regulated are the ones who can interact with their treasuries and use them to gain yield.
At this point in time, if you actually try to buy treasuries in the retail world, non-crypto related, it can be quite hard. At an institutional level, there's also better rates. So at this point in time, we act as an institutional partner to Ondo, but of course the treasury and the KYC to our users is on a B2C basis.
Okay, perfect. And with regards to the KYC, KYC AML processes that you've implemented, do you mind diving a little bit deeper into who you've worked with, if you're working with any providers, and how you actually manage to set up that entire process? Because from my experience, I've seen that KYC is it's a bit of a stumbling block. Obviously, it's a commodity at the moment, with regards to the number of different types of KYC providers that are there on the market. But from a crypto Web3 perspective, it's actually not as much of a commodity, and there are slightly limited providers who can do wallet verification, who can do other types of activities. So would be interested in hearing about your experience in interacting with the KYC space, and how you've managed to go about it.
Yeah, I wouldn't really call them a commodity personally. I thought there was plenty of providers out there, and I wouldn't like to be a salesperson for a KYC provider because they all tend to do the same thing.
Yeah.
So yeah, basically there's two sides to it. So number one is the software or the user journey that verifies the authentication of the ID. So that in itself is its own IP. What a lot of the big providers do, and the good providers, we're working with SumSub. They're a great partner. They're very their platform and dashboarding is very advanced. What they would do in terms of their IP is, aside from them being able to get good digital recognition of your identity that you're taking pictures of, what they also do is they have a very fast mechanism to check the verification of that ID. Are you on any sanction lists? Are you, for want of a better word, someone that shouldn't be dealing in cryptocurrency, someone who's blacklisted, someone who's maybe being fraudulent, right? So someone who's using a fake ID, they're able to catch that very, very well. So that's the IP of the KYC providers. We had thought SumSub was the best in the market. They had worked with a lot of different crypto companies before. I do believe that they aggregate identification as well, in the sense that they're able to cross-reference if someone has used other platforms. It actually builds their own IP in terms of their data structure as well. But the second piece of where we come in as a business is that if you're licensed, as we are in Europe, you also have to set out your own framework. So these KYC providers are more modular, right? So it's basically you can choose how you wish to use them. What level of checks and balances do you want of a user? So the goalpost for that is actually changing in the regulatory changes that are happening now, right? In terms of how much level of authentication you need per user to cross-reference and approve them to use your services. But basically that's set out by the institutions, right? So basically as a business comes in, they will state, what is the level of deposits a user needs to hold before they need to do checks and balances. If they go over a certain threshold, how much more information do we need upon the user? So that's through an AML framework.
Yeah.
We utilize MiFIDs, which is a very popular scheme in Europe in terms of the standardization, in terms of what AML policy should be. There's pretty set structures. It's around deposit levels. It's around blacklisted countries. There's some jurisdictions where you shouldn't take users whatsoever, just due to sanctions lists, etc. And yeah, we followed the main framework of that, and then basically integrated SumSub into our services to ensure that the checks and balances as users come onto the platform are checking out, to ensure that we can take them on as a consumer.
Perfect. No, that's a great explanation. Yeah, no, I think that makes a lot of sense. And so let's move on from some of the drier aspects of setting up some of these institutional products, and talk about a little bit about how you actually went about the process of ideating, of building your company, of figuring out who exactly the customers you want to target are, and how you're going to be doing it.
Sure.
And yeah, I'll let you start off with that, and then we can follow on.
Yeah. So we have been a registered business since July 2022. We're looking forward to our first year officially with Klink in July this summer with the team. But ultimately, myself and my co-founder Philip have been validating it from January 2022. So still height of a bull market, well, coming off the back of the bull market. But what we had identified basically is that most platforms, for newcomers and even people who just like to passively hold digital assets, mostly held through services that are very speculative, right? So a lot of exchanges that are welcoming trading, a lot of leveraging, a lot of different microservices within these platforms that aren't really akin to people that just kind of want to create some excitement from holding their assets, but not really actively manage them. So that's where the starting point was really, right? Is that we'd observed that there was plenty of people out there that hold crypto, but they're still akin to Binance or to other services, some that aren't
Yeah.
even around anymore, right? In the last 2 years.
Wonder which
So
ones you're
this is
talking
where,
about.
yeah, well, there's plenty, right? And but ultimately, what we had basically seen was there's this gap, right, amongst plenty of people who we call the crypto curious. They're my friends, they're my aunties and uncles, right? People who like to hold it, but are either going straight to exchanges or holding it in basically derivatives on Revolut bank accounts, etc. So they're not actually having the assets themselves. And in terms of passively earning on them as well, managing keys, for many people out there, that crypto curious consumer, plenty who have left the market in the last 2 years. So there weren't really many services for them, right? That just created that level of excitement whilst just holding over time. So that's where we started. As I'd mentioned, I personally engaged with the pricing saving schemes as I was growing up. So in Ireland and the UK, they're known as premium bonds. They're something your grandmother would buy you when you finish college or university, right? In the hopes that you would win. But they're highly successful scheme in traditional banking. And I'm not talking Web 2, I'm talking Web 1. Like, I think I have some of these bonds in my drawer in my family home in Ireland, right? So
Yep.
this age-old premise of community savings, but just completely died a death, right? So we validated that a bit more. And what we had seen was basically that there was a lot of kind of neobanks out there that were gamifying finances. So for positive, Robinhood is a very good example of gamification and trading, which is a little bit different to us. The way in which I would position them is that they're again on the side of speculation, right? They welcome people into options, taking high risk trades, basically active management, rewarding people for active management, which we all know for many people doesn't really work out that well, right? So what we had also seen basically was there's some neobanks out there that were trying to gamify savings, but couldn't really monetize it that well, being in the fintech world. So if you know much about neobanks, although once they get to scale, they can have many microservices, want to move into lending, etc., loans. For the earlier stages, plenty of it comes through transactions, right? So neobanks typically work through interchange fees, swipes on credits, especially in the US market. So very hard to monetize these schemes to create a reward system that isn't still welcoming the users of that platform to be spending, right? So there was no real perfect mix in this. So myself and Philip, my co-founder, we were crypto natives. We've been in it for 5 or 6 years personally, right? Was in terms of bridging the gap between this huge market of crypto curious consumers, which is a huge amount. So in the UK, about 7 to 8% hold crypto of the population, and around 4 to 5% of that was holding it in centralized CeFi Binance exchanges, right? So just inaccessible of this huge amount of liquidity of users, but still they choose it not in confidence, but not access to like kind of easier to use platforms such as ours. Would be that we would be able to create a bridge for them into the blockchain economy where they can earn in a fun, exciting manner without actually having to take all the risk. So we formulated this. We did some early research. We created a dummy app. We managed to get a couple of hundred users in, build enough data for us to basically have a use case where we raised our starting round. So we were 2 guys with a deck around March till May with a very, very bad MVP. We managed to raise a starting round in July of 2022. That was $500,000. Recently just completed the bridge of another couple $100,000 earlier this year, but basically getting us to be able to get our amplification of our services with our starting user base, get our product into the market, get our licensing, etc. So we've covered a huge amount of ground basically from this validation, but all off the premise of that kind of frame of thinking, whereby although we're in the deepest, darkest side of the bear market, if the market shifts, and as you will probably know, being within the financial world, is the sales can change very quick, right? If monetary policy changes, which we're personally believing that next year, later side of 2024, we're not going to be in the same cycle as we are now. And there will be that consumer that will come again. They'll come in their droves, and there needs to be services out there that kind of is built for them based off that thesis we've seen from that previous cycle of the market.
That makes a lot of sense. No, I like the thinking behind it. And in terms of your the model of price link savings themselves. So how would you, so obviously, it's very clearly different from a regular savings account. Do you mind
Mhm.
diving a little bit deeper into why exactly you think customers would choose, to essentially hold their savings at a Klink, for
Yeah,
example, rather than at a bank, or even let's say a crypto bank that might come up at the time that you're talking about at the end of 2024, where you can do is, I guess, what you said Binance allows for, which is
mm,
you can have your assets and then they stake it for you and they just give you the stake yield back.
yeah,
They don't. It's not like a chance draw. So that would be good to
of course.
get some insight into that.
Yeah. Yeah, no, it's a very fair question. What I always say is that they should be doing that. They shouldn't hold all our money with us. That's a bad decision. You should
Yeah.
never have your money channeled into one service. But in terms of earning passive income and diversifying your savings, there should be no reason why you shouldn't hold 10 or 15% of your total crypto worth with us, because every day you can earn up to $250,000 in each token that you're holding, right? So what can be better than that? You still earn a yield. We looked at a lot of different services in the pricing savings space. So religiously looked at this in terms of what's worked, what's not worked, in terms of even on a professional, on a growth side, what is the model that consumers prefer the most? There's a few different models out there. Some are one winner wins it all, one day of the week, right? Some of them are that basically the winning is spread out. So we're more on the spread out yield. So the
Yeah.
upside's still there, but you should still be earning variable interest on the upside through using our services. So diversification is key. You should hold some allocation of our services. It still earns you yield. It's a good, exciting place to hold your funds. It's a safe place to hold your funds. We've over $30 million of insurances. As we've mentioned in the earlier side of this podcast, we do side on the side of the regulators now to make sure everything's exact, everything's functional, everything's working. Some other secondary insurances as well. As I mentioned, the top prize insurance. We also have slashing insurance for staking, etc. So really regulated, very, very safe and insured platform. And you have the opportunity to have life-changing returns that you would never earn on a fixed nominal interest rate if you were just staking it yourself with the amount of funds that you hold. So diversification is key, but having some allocation towards our services, we believe, is imperative.
Cool. Yeah, that makes sense. And then just in terms of the so in terms of the tiers, for example, so you're saying that you're going to be moving on to a daily reward distribution model.
Mm.
So what exactly are the reward tiers? How much? So you said $250,000, but is that just the top reward, or is that the amount that's spread out? Like how exactly does that work?
Sure. So basically, through the ticket mechanism that I mentioned with you, if you match all numbers through the sweepstakes, basically you will win the top prize. But if you match one number out of the prize pool, basically of what we draw per day, you win a couple of cents worth of that token. It's completely changing. So we have basically dynamic prize payouts. So the rewards matrix is changing every 10 minutes. So it varies. It depends how much we're earning off the validators or whatever the tokenized treasuries are at that point in time. So it's dynamic pricing. But the yields will be variable and we present them live through our services. So say for instance, Polkadot, the yields are quite high in that. They can be at 15, 18%. The variable rates will be similar in that form as well. It all really depends on what we're earning on the institutional side and what the actual rates are through the validators, etc. So it's dynamic. But if you basically, at this point in time, to give you a statistic, if you hold at least, I believe the last time we checked, $50 in Klink, you have about a 25% chance to win every day, something. So there's always there's some variance of price at every point. So that's through the weekly. We move into daily draws. So basically, at a pre-seed level, I'm very happy and open to discuss this in terms of probably your listeners, perhaps there's founders out there. When we first launched, we had thought of many things, right? Until you actually really meet your community and your users, right? And one kind of logistical challenge we had was basically that if a user came on, so our draws are currently running, but they'll soon move to daily draws. So basically you'll win every 24 hours. So you have a chance to win every 24 hours. It was previously every 7 days. So logistically, it was hard to onboard a user midway through the week because the draw would start on a Sunday. So if you started on Sunday, you have the full chance to earn throughout the week. But as users are still quite new to this business model, right? So it's an educational piece in terms of getting them on board. We felt that we must move to daily draws. So the probability is divided by 7, but you still have the chance to earn and come in during the week. You can deposit assets, etc. It's a lot more free flowing in terms of the deposit, withdrawal flows, etc. Whereby you have as much of a chance to earn as someone who came in yesterday, the day before, or the day ahead of you, as opposed to someone who had started the services a week before you. So that is the most major change we've done. This also allows us to move into more volatile tokens a lot easier as well. So test and repeat, learn every day through the interaction with the users. But yeah, if you hold assets with us day by day, you have the chance to win on the upside to 250,000, which is insured, but still earning nominal variable interest rates through probability over time.
Okay, and so a couple of questions to follow on from that then. So in terms of the number of users that you have currently, do you mind expanding a little bit more on that? And then following on, how do you plan on dealing with, so if let's say everything goes swimmingly well, and Klink is a massive success in a couple of years, fingers crossed, what would you do in case there are a lot of users that come in, and the probabilities of each user winning, they reduce, right? Because it's just the amount and the volume of the users that are that are on the platform. So how do you plan to retain users? So for example, let's say that I'm on the platform, I've been on there for like 6 months, and then I just haven't won, and then there's like a bunch of people like that. If the platform grows big enough, how do you plan on solving that problem, or is that actually a problem for the good times when the times roll around?
Well, it won't be a problem at all because it's completely scalable, Siddharth. So the more liquidity and assets we hold, the more yield we can earn, which is distributed across communities. So this one winner wins it all is a model that we've observed. Some in the crypto space, some in the Web 2 world, the Web 1 world, it doesn't work. So it's completely scalable based on how much users' assets we hold over time. So we won't run into that issue. There'll be no way in hell if someone holds with 6 months is that they won't be winning. That's how our platform works in terms of the distribution model. The first piece you'd asked me was, may I just say on that as well, is that the pricing savings model will only be probably a microservice in 2 to 3 years of our platform. We do want to offer fixed term interest services, etc.
Okay.
But obviously going to market and owning this space whilst also offering gamified services throughout various different opportunities. So we could gamify payments. We can obviously gamify and make community development, private pools, etc. So there's a lot on our roadmap basically that we're rolling out, that this is ultimately our focus, our go-to-market services to bring into the market and then expand into being a holistic solution over time. Obviously serving that kind of consumer demographic that I mentioned as well, without letting them take risk. So you mentioned as well on the stats. So we've over 19,000 signups. We're in a private mainnet at this point in time. There's about 3,200 users since I checked this morning, operating all across the world. So we're in most jurisdictions globally. We're not in North America, but still in most countries outside of that. So yeah, plenty of users coming in out of the APAC regions. We have Latin American users. We have Europe users in Europe. It's something that really gets me out of bed in the morning, right? Is that we're building such a community. But yeah, not really spending anything on marketing actually. So I think all in, we've tested some marketing, about $4,000 or $5,000 worth, but still more organic, word of mouth. We've done some guerrilla marketing tactics as well. So once we've gained a huge amount of insights into that as well, right? With the consumer type, what they like, what they don't like. As I've mentioned, the whole platform has shifted in terms of its game mechanics and usability in the space of the 3 or 4 months that we've been in mainnet, closed mainnet. So once we move into the daily draw, we have a fresh upgrade coming on our design and branding as well, as that we're going to flick the marketing switch on from the insights that we've captured, perhaps by June or July of this year, and at the end of this month or early next month, where we'll start building and scaling out off our marketing efforts, bringing in more communities from those jurisdictions where we've already captured those main insights from. So really happy with the community so far. I'm very excited to expand it as we roll towards a later stage of our business.
Perfect. And in terms of the longer term plans, so you mentioned, that obviously this is I guess the first step into actually getting users to use the platform. So what is the longer term plan for Klink Finance? What do you want to grow into? I mean, you said you want to offer fixed interest, fixed income securities, things like that. But what is the longer term vision? What do you see this developing into?
I think some people would disagree that there's securities as what crypto, right? So that's a different conversation. But basically, we're a hodler service, right? So basically, if you want to hold and save over time, Klink will be that place. We have plenty of services basically planned out. I wouldn't want to mention them too early in our roadmap because it's ever shifting. But basically, getting users to develop more of the savings habit, a hodler habit, and rewarding them for taking those types of behaviors, making it more community driven, private or public pools, etc., of hodling accounts is something in the framework of where we're probably going to move with. So community savings, hodling, issuing the capability of good tokens, right? So no shit coins, pump and dumps, none of that, right? Where we make a very good, well audited platform for people to earn crypto assets over time through good, mean, exciting ways, which doesn't welcome speculation. So there's a wealth of opportunities for it to do that. But of course, product number one is of our core focus at this point in time.
Cool. And how exactly are you getting it into users' hands at the moment? Is it a mobile app? Is it a desktop app?
Sure.
Yeah.
Yep. So we're available on iOS and Android. We basically being built on React Native. It's a code base that's been created by Facebook. It's very scalable actually. So basically, because we're built on React, we plan to scale our way into a web application in the later part of this year, maybe early next. But at this point, we're available on iOS and Android, available across all devices.
And how do you plan to deal with the notorious UI UX issues that this space has faced, right? So obviously, it's very difficult for users, as you mentioned, to get onboarded into the crypto space at the moment. I mean, private key management, setting up wallets, it's just a very difficult space for someone to actually embed themselves into. If they, you download an app and you just get going in Web 2, you can't really do that very easily in Web 3 at the moment. How do you plan on bridging that gap and making the user experience as simple as possible? You're going to use things like round extraction. What's the strategy in that?
Yeah, so we describe ourselves as basically a Web 2.5 platform. We look and feel like a neobank. So it's a very simple onboarding. It's just some basic information and details. We're integrated through on-ramp services where you can use debit, credit card facilities to pay for services, or else you can send directly from a crypto wallet. So the UI UX problem is an ongoing problem, always, right? But I would say the feedback that we've got from our consumers, the data we have through the integrations and tracking we have of our platform is that the user flow is pretty decent so far. But of course, scalability always comes into play, right? So aside from that, we have some secondary service capabilities as well. So we have plenty of blogs and information of how to actually use the wallet. We're about to create an explainer video, how-to video. Also have intercom integrated into the platform as well, where you can easily just chat to us directly if you're having any issues as well. So I wouldn't say that we've had too much of an issues in terms of onboarding users. Also as well in terms of our channels as well. So being licensed, we've been able to access Twitter marketing. So in terms of paid services, Web 2 channels, where a lot of kind of DeFi protocols, etc., they can't market directly to consumers of that bracket that we've mentioned to. We've direct communications to them through our performance marketing by kind of being that middle ground. So very neobankish, very easy onboarding, obviously gaining access to consumers that are in that bracket that I've mentioned by gaining those kind of Web 2 channels where those users are interacting on.
And do you have so you said you use Fireblocks technology to custody the assets. Do you have, so you're a qualified custodian. Is there a plan, for example, is it possible in the near future to allow users to self-custody their assets on Klink using, let's say, for example, a Web3 wallet as a service? So there's been quite a lot of that. That's been getting released over the last few months. Even Fireblocks is working on something like that, and Coinbase has released their Web3 wallet as a service. So, do you plan on using things like that to allow people to be more self-custodial without actually knowing it's a wallet?
So you can connect your wallet through our services as well. We have Wallet Connect soon to be rolled out. So bridging your wallet address into our service is pretty simple. It's 1 or 2 clicks. We could create layers of smart contracts outside the custody to the flow of assets. It's completely applicable. But at this point, in terms of the framework and structure that we've created, it's not something that we will start with immediately. So of course, we can build our own smart contracts that then distributes liquidity back into custody first in terms of where we're distributing our treasury. So it's not that complex of a task. But at this point in time, with the consumer base that we're targeting, we don't really feel that at this point it will be of direct implication for us to implement. As well as that, there's a huge downside risk of smart contract hacks, people coming in trying to ruffle feathers in terms of your IP, etc. Fireblocks is a fortress. Our consumer base, mostly not self-custody, crypto degens, as I'd mentioned, right? So at this point, self-custody is something we will definitely bring at some point in time. But in terms of the capabilities and safety and risk there is attached to it as well, we don't think it's imperative to implement straight away.
Cool. I'd also like to touch upon, you mentioned a few times the insurance angle, DeFi insurance, things like that. So what exactly are these insurance services that you're using, and what are the limits? What's covered? You said that the $250,000 is covered. How exactly does that work? Yeah, because there's not been, we've done some work on talking about Nexus Mutual and diving into that and understanding the DeFi insurance market to date. And it didn't seem as if there were any solutions that were up to scratch. In at least a few months ago at least. So would be very interested to know what you guys are using.
So we've developed it ourselves actually. So there's 3 pieces to our insurances. The first piece is we utilize Fireblocks. They have $30 million in breach of assets through their custody. So it's the first piece. So no smart contract hacks on that side. That risk isn't there. The second piece is in terms of when we have the direct validator implementation where we're staking, we'll have slashing insurance. So ultimately slashing is where there's hacks on the validation of the transactions. Users can lose money off that. So we're on a scalable approach as well, also insured by how much liquidity we hold. If there is a breach through the staking validators, that's completely insured through third parties. But the piece of IP that I mentioned there is basically prize indemnity insurance is a very well-known insurance in the Web1 world. So if you ever heard of hole-in-one insurance or, golden goal insurance, right, whereby someone by chance through promotion wins a very hard to reach goal, such as say, for instance, you're at a golf tournament, there's hole-in-one. So it's popular in the Web1 world, not really brought into Web2 all that much, right? But ultimately, being on chain, prize indemnity insurance is a very fresh breath to DeFi insurance. So most DeFi, actually, I would say nearly all of DeFi insurance is around helping users avoid risk. But it's like, okay, if I make a mistake, if there's an attack on a service that I'm using, if there's hacks, vulnerabilities, X, Y, Z, the infancy of DeFi insurance at this point in time is that it protects users against risk and mishap. But prize indemnity insurance is almost on the flip side of that, because what it is actually doing is getting users to invest in DeFi in terms of investing in services, but only for upside capability, right? So it's actually it's a welcoming change to risk. It's actually reward based. So the way in which we've done this is that we use smart contracts and IPFS files. So Chainlink, how much do you know about the crypto protocol level, like in terms of how much I'll describe it? Okay,
I'll understand
it. So basically, we use Chainlink VRF. Chainlink, of course, is an oracle which brings off-chain data on-chain, very simply, right? So people can use it for stock trading information, etc. But Chainlink has a service called VRF, whereby they use random number generation models. It's called RNG, random number generation. Yeah. So provably, completely authentic, is that basically it's truly random number generation is what we use in our prize draws. But how can we cross correlate that in terms of the tickets that we populate for the user? So tickets are users given random tickets with random codes on them, so 7 numbers on each ticket. So what we do is we basically use IPFS files. That's basically a file type where we're able to consolidate all the tickets that we create on a given daily draw. We upload that onto a smart contract. We then run the Chainlink VRF. and the smart contract cross verifies basically if the 7 numbers that are drawn from Chainlink verify into the IPFS file that has been uploaded prior to the draw happening. We use a third-party we use a third-party DeFi insurance provider that has done a dual build with us on this. So one side is our integration with Chainlink VRF. One side is our own smart contract that is cross-correlating the IPFS file. But basically, the DeFi insurance provider will also read the smart contract. If all 7 numbers cross-correlate, the user's balance will be immediately deposited from the DeFi insurance partner. So we've completed the agreement with the insurance partner. We're about to do a press release at the end of the month. I won't name them yet. When will this podcast come
out? Soon. So I think you can. Yeah.
Okay.
You can,
I'll
let me know later.
Keep an eye out on this, right? But basically, the insurance will come. The integration is being built at this point in time. We'll start with $250,000 daily insurance. We want to rack that up to $1 million by the end of this year. Hopefully, obviously, we want to test and repeat the model. As we become a bigger business, we could bring this up to $10 million top prize insurance, $50 million top prize insurance, whereby in essence, we're actually a complete competitor to the traditional lottery market, but we're also incentivizing savings behavior because you don't actually lose any money whilst you're actually encompassing of this. So yeah, we've built that IP ourselves through smart contracts, IPFS file uploads, and integration of Chainlink VRF, and then having a secondary build with a DeFi insurance provider, which we're very excited to commence working with from the end of this month.
So why exactly do you need the DeFi insurance provider to check the numbers? So you're making sure everything's okay, but is that it? Is it to just make sure that the numbers are corresponding on the ticket and the ones that you release in the IPFS file, for example? And
it proves that everything,
is correct.
So it proves basically completely transparently on chain that it is what it is. If someone wins, it gets paid out straight away. So it's all automated format.
So when would but like what exactly are you paying premiums for to the DeFi insurance provider, right? Like under what conditions would they have to pay out to you or to like users? Like so of course, like, you know, if the numbers don't match, that's one thing, but what's the insurance aspect of this? Because this is just a checking function that says that, okay, those, you know, you've essentially got a second or a third party checking that the numbers are the same on the ticket and on the IPFS file. But you know, what's the insurance angle to this? Like how does this?
Because they pay the top prize if someone wins, so they pay out the 250,000.
But that's from the yield, right? That's from the yield collected.
No. That's completely separate. So we pay out yield on the smaller prizes, but the top prize is covered in the case that someone wins. Yeah.
Okay, so the top prize is covered in. It's a completely separate thing where insurance will pay the top prize out. And is it necessary that there's a top prize every day, or or every week at the moment, or will the top prize? So every week there will be a top prize.
Every day there's a top prize. Someone can win that top prize every single day of the week. Yeah.
So you must be paying pretty hefty premiums to the insurance provider.
It scales up. Yeah, so it scales up the liquidity. So they're a scale up themselves, so they're not Nexus by any means. They're not Goliath. So basically, we built this with them. It scales up. It's actually pretty cost effective at this point in time, and a lot cheaper than working with Web2 providers. So we actually spoke with insurance providers like big banking, traditional insurance companies, and they didn't want to go near crypto. So basically, we went to the crypto DeFi insurance providers, and we're actually building a completely new model of insurance that's come on chain, as I'd mentioned. So I would actually say it's quite cost efficient in comparison to traditional insurances.
But what I'm trying to like get to the bottom of is, okay, let's break it down, right? Like and I'm pretty sure there's a kink in my understanding of this. But the insurance provider will pay out $250,000 every day, right?
Only if someone wins.
I mean, but like the someone winning is kind of a guaranteed thing, right? Like you said, someone would win every day. No. When does someone win?
So it's low it's a low probability. It works like a lottery basically.
Okay. So then it's essentially okay. Yeah. Okay, I've got it. Okay, so it is a probability based.
So basically, it's all probability based. Yeah. So ultimately, the lower echelon prizes are earning you variable interest day on day, but ultimately you can still earn on the upside of 250,000 by winning the top prize daily.
So it's a completely and okay, so they judge the premium amounts based on essentially the probabilities from the numbers. Okay, yeah, fair. That's like a pretty easy thing to model actually. For an insurance provider. Yeah, that makes sense. And then they would pay out the, okay, that's very interesting. No, I like the model. Thanks for explaining that.
That's great. Sorry, I missed it in the middle there, right? You're a bit lost.
Yeah, I thought that the $250,000 also came from the yield. No, I mean it helps, right? Because we got to the bottom of it. Yeah, at the end of the day, so it's all good. Cool. And I'm conscious that we're coming up on time a little bit, but I wanted to also just chat a little bit about your fundraising experience and the investors that you've got, the help you got from them, if any, and what your plans are with that regard as well, in terms of fundraising. And yeah, just a little bit on that, and would have loved to actually, if you had a little bit more time, to dive into your crypto journey over the last 5 years. So yeah, would be good to get that.
Sure. So I don't know if you saw PitchBook came out with a chart over the weekend. It was shared on CoinGrams that basically crypto investment is down 98% year on year. I don't know if you saw that statistic. So it's not good out there, right? So yeah, I feel very privileged to have met great investors along the way. So we have 3 funds in Singapore that are supporting us. Some are very active in engaging with us. They really believe in this model and that kind of consumer demographic that we're going after as well. So it was broken into 2 tranches. We raised our first pre-seed in the second half of last year, and also did a bridge round or a follow-on basically earlier this year. So that has allowed us basically to build a product, optimize the product in the way that I've mentioned as well, get our licensing, get our insurances. There's a huge amount of legwork in terms of just setup, right, of getting from that 0 to 1 piece. The next phase of our business is getting to certain milestones in terms of our user base, the usability. Obviously, it's not all about liquidity at this point, but more so, do people enjoy the service? Are people using it? Are they coming back? Seeing really great use cases where people, they'll start with maybe $50 in deposit, $150 in deposit. Just today, we had a person sign up 2 weeks ago. They did the draw over 2 weeks and they deposited $10,000. So this is something we're really, really like to see, because although it's a new business model, once someone actually interacts with it for a few days, they get a feel for it, etc., is that they actually trust the service. They actually like the service as well, because it's such a unique proposition in the market and compared to everything else. So really starting to see good indications of that on a consistent basis, right? Smaller deposits rolling into larger repeat deposits, which is a real key indicator of a moving towards product market fit, let's say. So basically, we need to get ourselves to certain thresholds and milestones, good consumer and user journeys that I've just mentioned there, right, where people like to use the service. We plan to raise a second round of investment in the second half of this year, perhaps maybe early next year as well. We've enough runway to keep ourselves going until that point in time where we believe we're most probably going to be in a better phase of the market than we are now. Yeah. Even if it's slightly can't be much worse than it is at the moment, right? But basically, yeah, for getting product market fit, understanding and getting these consumer journeys and basically where we're getting our IP and our product up and live. So that DeFi insurance build has been pretty cumbersome of a build, so that's about to roll out. There's a few other kind of features that we're rolling out towards the end of this year as well, growing the user base, and then basically scaling that out. So basically, we aim for a 2 or 3 million round or late this year, early next, where basically we, from our hypothesis of our marketing, of course, we're going to spend more, as I've mentioned, we'll begin spending on the second half of this year, is that we get these key customer insights. We still understand where is the best use of our spend and just continue to build out the platform. So that's basically where I stand now with the investment side of things. Our investors are amazing. So we've got really, really good backers that really understand the product. And they're very patient as well, right? So they understand there's an essence of getting yourselves to that product market fit phase, which isn't a granular straight line either, right? So yeah, that's been our journey so far.
That's very interesting. Yeah, I think, I'd love to continue sitting here and chatting with you. It's been a super interesting chat today. I've learned about a market that I had no idea about, which is price-linked savings. I've been living in the UK for like 9 years now. No, I hadn't ever heard of it before. So
It's called premium bonds in the
Premium bonds.
UK.
I think I have like come across premium bonds somewhere before, but
Yeah.
no, super interesting and great to chat. Thanks so much, Chris. And yeah, guys, for anyone interested, Klink Finance is it's up and running. It's a very interesting product. You can learn about it today, and yeah, great to chat with you, and thanks so much for jumping on the pod, and see you guys next time, everyone. Thanks.